Good morning, everybody. Let's make sure we got the light under wraps here. Hello, how we doing? Welcome to this fine Tuesday. I'm privileged to be here. This is the Premarket Prep session. This is our session where we go over all the important news, notes, information, data, analysis, right? Potential trade ideas that will be pivotal to maintaining profitability here, while trading markets. My name is Adam Holland, stock options expert market strategist, but most important, right, purpose chaser, right? Someone that's trying to get 1% better. We recognize that, yes, it's fun to have money, but money can be a curse to you if you don't know what the heck you're going to do with it. So you want to make sure that you are getting this money as a tool in order to pursue purpose, right? And that makes sure that the vision is always bigger than the obstacles, because there will be obstacles. Just like any endeavor, there's going to be obstacles, and you are going to have to overcome some stuff that you really wish you didn't have to. But the only thing that's going to put you through it is a vision that is bigger. And unfortunately, a lot of times, just a vision of you going on more vacations or something like that really isn't big enough to put in the work that you need to put in, right? So it needs to be, oh, your family no longer being hungry, right? Oh, you no longer having to constantly move, right? Oh, you not having to wake up feeling like you're drowning in debt. Those are the things that motivate you, right? To wake up and be here for these sessions, to wake up and, join the Facebook group and to watch the analysis videos, to watch the call outs, to execute and to make money, right? That is what drives you ultimately purpose. Because at the end of the day, a dollar ain't nothing but worthless fiat, right? But it's what we do with it and what we have the ability to do with it that sets it apart. So I'm excited to get into another day. We have some big data here this morning, some big data that's dropped, and I feel like that'll probably be our top news here. Inflation watch. So the latest indicator on inflation will be published today at 8:30 a.m. This newsletter comes out before then, so they don't know yet. As the Labor Department releases its report on the Consumer Price Index for October. Investors are hoping that there will be signs that inflation continues to dissipate, but if those signs aren't there, or there are surprises, it could risk the chance of another interest rate hike in December. Another item to be aware of is new changes to the calculation methodology of health insurance costs. That could result in the category becoming a net contributor to inflation and will be noted by market watchers and the Federal Reserve. Now, by the numbers, October's CPI is expected to rise only 0.1% month over month, compared with a 0.4% increase in September on a year-over-year basis. It's expected to rise by 3.3%, down from 3.7% in the previous month. Core CPI, which excludes food and energy, is anticipated to increase by 0.3% month over month, the same rate of increases in September. Year over year, economists on average project a 4.1% rise in October, also unchanged from the September rate of inflation. So overall, we had positive expectations going into this, right? It was expected this would be, a record number in a positive way in terms of inflation not going up. So in terms of a downside surprise on CPI, that could spark another drop in yields and boost risk asset prices in a way that reignites the year-end rally, according to Seeking Alpha Investing Group leader Lawrence Fuller. Otherwise, or others like Mott Capital Management see a bigger chance that it will surprise to the upside, especially due to the rise in health insurance. The data forecasts seem to indicate that healthcare costs will be rising starting with this October report. And if that is the case for inflation sticking around for some time only seems to strengthen. So half full or half empty, there are many ways in which progress has been seen with regard to price pressures while the economy and labor market remain on solid footing. Headline inflation is down significantly from the 7% seen at the beginning of the year, and it will take additional time from the current 3% clip to the Fed's desired 2% target. Others see things as more entrenched, especially when looking at core inflation. The elimination of the pandemic and supply chain disruptions were the low-hanging fruit, and underlying price pressures are proving stickier by showing some recent signs of stalling out. So in terms of that data here, we can pull that up and see what we've got going on. Okay, so U.S. October consumer prices unchanged, consensus 0.1%. U.S. October CPI, excluding food and energy, up 0.2%, consensus 0.3%. So that's good. That's better than expected. U.S. October consumer prices increased 3.2% from a year earlier. Core CPI up 4% over year. Let's see. U.S. Treasury yields extend fall after consumer inflation data. Spot gold gains after CPI data. Yeah, U.S. CPI month over month actual was 0.0% versus 0.4% estimated was 0.1. So that's good. There was no, rise in inflation month over month, and we expected a small rise. So that's good. And then traders erase view that Fed could raise rates any further and add bets on rate cuts in 2024. So I think what's important to remember here is something that I always talk about whenever we get CPI data, and that's the fact that CPI is not the Fed's preferred measure of inflation. It's PCE. But CPI always seems to be the one that moves the market more. Don't know why that is. I don't make the rules. It's just, like everything else with markets, you have to see what causes price action, right? What is a determining variable in price action, and then keep that in mind. And it's been CPI, not as much PCE. So while this should influence what the Fed, thinks, they're still going to keep the most eyes on PCE rather than CPI. But now these are important kind of, updates that are coming afterward. Fed interest rate cuts now seen starting in May based on trading in Fed funds futures. So we'll see, right? We might end up getting cuts in May. That's just what people start pricing in as data comes out. So that can change, right? But this is just what people are now estimating, is that we could get rate cuts in May, which is pretty soon, all things considered, right? So yeah, let's check out markets. Where are we at? Market up based off of that. This fits pretty exactly in line with the expectations that we had yesterday, right? I expected and said that in the group that we were likely going to have good news that came, and the good news did come. So does that mean that it stays? Absolutely not, right? We could sell right back off and give it all back. But as of right now, SPY is up significantly, right? From like 440 to like 446. So our calls, right, that were swung should look good, right? They should look quite good here coming into this morning. And again, not swinging anything with crazy size, but, Tesla looking quite good coming into today, broke that downtrend last night or yesterday. So looking good happening here. Also, I'm trying to get it together because I woke up at 4 a.m. and could not get back to sleep. So I woke up when you're kind of so tired, you're like, I don't even know if this is real right now. That's kind of where I'm at, but I'll get my tea in me, right? Do a little meditation and whip it into gear. But like I said, sometimes you have those great mornings where you wake up, you run your 3 miles, you do your push-ups, you do your abs, and then you sit down and you crush this. And then other mornings, it's like, what day is it? Is it 2026? You have no idea. Both days, you still need to be able to execute, or at least put your best foot forward. Just being open and honest with you guys as much as I can be. In terms of economic news, shutdown risk, U.S. House Speaker Mike Johnson's 2-part stopgap federal funding plan is set to face a vote in the House, with the plan widely expected to get blocked and raising the risk of a partial government shutdown. Some hardline House Republicans are already against the plan, as it doesn't include spending cuts, while the White House also denounced the proposal, with President Biden likely to veto the measure. The burgeoning deficit and political polarization in the U.S. are the main reasons why Moody's recently cut its credit rating outlook. Seeking Alpha analyst Demir Tokic expects Moody's to eventually downgrade U.S. debt too, as fiscal stability remains threatened by current political dynamics. In terms of sports news, new sportsbook competing with FanDuel and DraftKings for online betting market share, ESPN Bet will go live today in 17 U.S. states ahead of the busy slate of college and pro games during Thanksgiving week. Significant integration is expected between ESPN Bet and the rebranded version of Penn Entertainment, Penn Sportsbook, and ESPN's media content. The launch comes at a time when Disney is looking to sell a minority stake in ESPN, with companies like Amazon and Apple speculated as potential buyers. Seeking Alpha analyst juxtaposed ideas is now cautiously bullish on Penn, given the potential reversal in its prospects due to ESPN Bet. I think that's definitely something, positive for Penn. I indulge in sports gambling myself, mainly just football. I don't do anything that I don't know or anything that I don't watch. So if they're running some promos, I'll probably be on ESPN Bet. But that's something that definitely has, Penn kind of moving a little bit at open in terms of if there's any opportunity there. Let's see. We can get like a close over this 23.87 level on like the daily, then I'm into it, with Penn. But I'd like to see Penn close above that, get a nice little daily breakout, and then see what we can do from there. But yeah, it's just kind of struggled around this 24 area. It was support for a while, and then it finally got beneath, and then now it served as resistance. So we really need to get above that 2387, 24 area to feel like, Penn has room to run. But on the weekly, it is looking, kind of falling wedge like. So it has potential to break up big. So something to keep an eye on, right? But if ESPN Bet does, a lot of promos, they get a lot of volume. This could be something that eventually does fire that huge weekly and really monthly falling wedge that they have. I mean, it's if you go to the monthly chart, it's really a monthly falling wedge. So something to watch out on Penn, right? If Penn starts to break out and has a few big weeks, right, it'll probably be likely long time to go long on Penn. You can go shares or you can go, long swings. Yeah, so potential opportunity. Keep an eye on Penn if it really starts moving. I'll set a little alert here. But again, we want to see it start moving. Everybody says, "Oh, this thing is so low, it's time to buy the dip." Guess what? Some things never stop dipping. Just like natural selection occurs with animals, it occurs with companies. There are plenty of companies that should never have existed, should never have had the valuations they did, and then they go extinct, right? Look at WeWork. Look at literally all these other companies. So don't say, "Oh, the company's down, time for me to just automatically buy the dip." There's no guarantee that this company does not die, right? So let's see. Cool. Set a little alert. 23.87 for pen testing daily bull flag, a breakout. Now, in terms of our next headline, aviation, Turkey Day tickets. Thanksgiving air travel is expected to reach record levels this year as demand remains strong despite high inflation weighing on consumer confidence. Airlines for America, a trade group representing major passenger airlines like UAL and DAL, said U.S. carriers expect an all-time high of nearly 30 million travelers during November 17th through 27th. It also anticipated November 26th to be the busiest day of the holiday period, a forecast echoed by the TSA. Roads will be busy as well, with AAA expecting 55.4 million travelers to head 50 miles or more from home over the Thanksgiving holiday period, up 2.3% year over year. Now, so I mean that, again, could be good for airlines, UAL, DAL. You always want to look at the chart and see if if that manifests. Right now, it's tough to see because everything is kind of up because of the CPI data. So it's like, oh, this thing looks good pre-market. It all looks good pre-market because, everything is pushing off the inflation data. Let's see. Just checking out UAL here myself. I mean, they are coming off another bounce in this kind of 30 to 35 area. That's been an area of support. It didn't quite make it down here this past time that it fell. So who knows, could continue further. But with people traveling, right, you could start to see some positive movement here. It's just I like to trade more blue chips than anything and things that have like really, really nice charts where it's just I could clearly see that there's been trend of accumulation or distribution that I can make decisions based off of that. Airline stocks are like bank stocks, though, in that when they do start to get going, they can typically go for like multiple days. So I don't know, maybe on AAL, American Airlines, a close over 12.08 by the end of the day. On any day, I'd like to look at some call swings there. We're kind of peaking above that now, so that's something to watch throughout the day. So that. But yeah, we could start to see, these airline tickers start to move as well. We can mark off pre-market high too, just in case they start pushing immediately. And typically also airlines and banks run together. So that is just another little anecdotal piece of information is that typically when airlines are running, banks are also running. BAC is one that's looking good here this morning. Let's see. Yeah, they're pushing big off that inflation news, and consequently, really, what's happening with the rate hikes. Like that's what they're pushing the most off of. But yeah, over 28.93. I like on the daily. I like BAC calls as well. Mm, 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 mm. Need some chapstick. Okay, nice. So, got a few alerts set, got a few different opportunities, short term, midterm, and long term that we're paying attention to, all pointed out here for the free on the pre-market prep session. Now, of course, if you want to be in there in the group with us trading, you got to make sure you reach out to me about that, right? Nobody is allowed in that group who is uneducated, so we can talk about getting you squared away in order to effectively take advantage of the opportunity in the group. So, while I love the pre-market prep sessions, you want to be there in there taking advantage of the opportunities with us, kind of rather than just tuning in for this. This is good. It's a good starting step, right? Especially to get you into that market mode. But you want to make sure that you are taking full advantage of the opportunity available. If you go through, right, the drive through, and you order a meal and you just walk away with fries, you didn't get everything you could have gotten, right? It's the same way in markets. If you show up and you're like, oh, I'm going to try and get as much as I can from the pre-market prep because it's free, and then you're leaving all this food on the table, right? All these good eats, especially going into holiday season, that ain't something you want to leave on the table. I'm so excited for Thanksgiving. Can't wait. When you got a family that throws down, I mean, I need to probably up from 3 miles to 6 miles every morning just to compensate for what is inbound here in the holiday season. But in terms of today's markets, everything is different now because we had data that came out, so I won't even go over that. Today's economic calendar, CPI data at 8:30 a.m. was the biggest thing. Now, in terms of what else is happening, I'll finish up here with our rapid fire stock rundown. Of course, we've got, a freaking fire truck coming through while I'm doing this. Should I just wait for it to go by? Mhm. Okay, nice. So, OPEC ups global oil demand forecast, saying weak sentiment is exaggerated. ExxonMobil, ticker XOM, to drill first Arkansas's lithium well, aims to be top EV supplier. I love this shift by ExxonMobil. This isn't the first time that they've had, information like that. I love this shift for them because, again, make yourself irreplaceable in the marketplace. We get it. You drill for oil, you're an oil company. It's something that the whole world is looking to phase out. So what do? Take the money you have now and invest in where the puck is going, right? This is what everyone needs to do. I don't care how much money I have now. I don't care how much money you have now. What matters is how much you can have in the future, right? So for everybody who's sitting there comfy in their jobs, doesn't want to learn AI, doesn't want to do this, and you're like, oh, I'm fine now. It's asinine to think that because you're fine now, you'll be fine 3 years from now, 5 years from now, even 1 year from now, right? So I say all that to say, be like ExxonMobil. Invest in where the puck is going. Don't say, oh, I got this good Christmas bonus and I'm going to use it on Black Friday and all these sales and all these Christmas gifts. Like, look, everyone right now is under fire. I'm sure everyone would understand it if you were like, hey, I'm going to use this money right now to invest in myself, right? I love you. I hope you're doing amazing. You don't need to get me a gift either, right? We can just keep both killing it in our own respective sectors, and push it forward, right? But I feel like everybody puts themselves under all this stress for the holidays when at the end of the day, you always got to do what's best for you and everybody's going to love you regardless. Right. So, don't feel kind of obligated and put under all this pressure. Do what you need to do in order to make sure that you're okay. It might mean not as much hanging out, not as much going out to spend money, not buying as extravagant of gifts. All of that is worth it, right? I'm sure it's not easy for ExxonMobil to start drilling a lithium well in Arkansas. That sounds like a very expensive, time consuming and arduous endeavor, but it's definitely worth it for the future. So I always try and look at what are big companies doing. I need to replicate that in order to be successful, right? Because the world is the same on the large scale and the small scale, right? It really is. So you find the same patterns that you do, in space, in water and in ice crystals, right? You find the same things in gems, across the world. So it's all these different things, right? Fibonacci sequence, you find that being useful in markets. It's also in seashells and in the way some plants grow. So it's like the world is the same on larger scales and smaller scales. Don't say, oh, I have nothing to learn here, because likely you have tons to learn in each and every sector. So Fisker, ticker FSR, slides as revenue misses expectations. 10Q filing delayed. Tech Resources, ticker TECK, nears deal to sell coal business to Glencore. McDonald's, ticker MCD, leveraging Grimace popularity with Crocs shoe collab. Anthem, Insignia, ticker CI, Express Scripts settle last claim in $14.8 billion lawsuit. Alphabet, ticker GOOG and GOOGL, ditches Robinhood stake, filing shows. So Google, I didn't even know that had a stake in Robinhood. I guess they sold it. Mega plane order, impossible China thaw, send Boeing stock flying. I don't like Boeing. I rarely trade Boeing. Boeing is, very combative as a stock, doesn't respect levels, and Boeing is on my crap list, right? For lack of better terms. Mark Lohr's Wonder Group officially swallows up Blue Apron, ticker APRN, and then Bank of America lists top 10 most and least shorted stocks by hedge funds. I'm sure, all the Reddit guys will have tons of fun with that. But that'll do it for us today, people. That'll do it for us this morning. Can this thing, was I just blurry the whole time? I can't leave you to your own devices. Anyways, I hope not. If so, you can just go ahead and throw headphones in. You don't have to look at my blurry body if you're watching via replay. But let's be ready to execute today, right? We got the good inflation data that we wanted. The call swings are looking good. And let's just make sure that we remain patient, ready to execute, and we'll have another great day in the books. I'll see you all back here tomorrow. Again, make sure you have a great day on purpose. Just get 1% better. That's all you got to do. And then you can lay your head on the pillow at night and feel good about yourself, right? And we can all push each other together to do that collectively. So have a great rest of the day. I'll see you back here tomorrow morning for our next pre-market prep session. Have a good one.